What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification buttons as well. Really helps the channel grow when you do that, but also you are alerted to when we release new videos. We do release bonus content from time to time, so you do want to be alerted for those. But the nightly and weekend videos, like tonight's video, mostly focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to leaps or swing trades as well. So if you want a deeper dive into exactly how we set up the charts, broadening formations, levels of support, resistance, things of that nature, make sure you check out the bonus content on our YouTube page. There is a couple of videos that dive deeper into that for you. And then if you are not familiar with the STRAT, make sure you check out the description of this video. There's a link to a free PDF with a quick reference guide in here for everything you need to know to understand the basics of the STRAT, which again is our charting and trading method. So go ahead and check that out if you're not familiar with it. But yeah, I encourage you to watch the full video. We do go over triggers and targets on all time frames, so it's some pretty good information. And with that, let's go ahead and take a look at the agenda for today. So first, we'll go ahead and recap the price action from Monday, February 9th. Then we'll zoom out like we always do, look at the week, month, quarter, and year. And then we will zoom back in to set the 4-hour markers and the triggers and targets for Tuesday, February 10th. And we'll do a quick look as well at the triggers and targets for the week, month, quarter, and year as well. Sorry. Mondays. Anyways, let's go ahead and get to the charts. Starting with the 5-minute, like we always do, this is how we can capitalize on our proven and repeatable strategy. That strategy is looking for higher lows at or above opening print to get into calls, or we're looking for lower highs at or below opening print to get into puts. If we're getting into calls, then most likely the previous high day and overnight high are going to be our targets. If one of them comes before the other, then that's the first target, and then the second one is the second target. And same with to the downside. If we're going to the downside, it's usually previous low day and overnight low that are our targets. All right, so take a look at the chart. We have our overnight high up here at 63.63, previous high day at 62.25, overnight low is down here at 58.75, and then previous low day is down a bit further. And then this price level here, price level 1 here in peach, that's our opening print. We'll look over to the left, that's that first opening print. So the strategy again played out today, especially if you were on like a 1 minute, or if you not necessarily if you were swinging, but if you were in here on the 1 minute, there was I think a couple of higher lows within here that you could have got in above opening print to go ahead and to get into those calls. Now the swings did look a little bit dicier, right? We made lower lows on the 5 and 15 minute, but we were still okay on the 1 hour. So definitely had to keep an eye on things, but didn't necessarily need to sell, especially because we were in profit already on those swings. But in just getting to only today's price action, if you were on the 1 minute, right, you had your opportunity in here, a couple opportunities actually to get your higher low, and then you would obviously have been able to cut or not necessarily cut, but take profits on part of your position at this previous high day. And we did get some, what we call in the STRAT corrective activity or sideways action, essentially, right here. And you can see that it is where, there's quite a bit of levels that intersect, right? Like we get this 4-hour downtrend right here, this dashed gray line coming through here. We got the previous high a day. This is the 100% fib retracement of the initial pullback that we had after this first push up in January. So quite a bit there. And then you can see we have this 15-minute broadening formation coming in through here, this light blue line going diagonally up to the right, and then we have overnight high. So had our first corrective activity here. We did actually take some profits on the swings that we got and entered into new positions once we went higher low on the 5-minute here. So we did go higher low, entered new positions, pushed up to where overnight high and 15-minute broadening formation essentially crossed, and you can see some more sideways action or corrective activity. We did get a lower low, but it came after a higher high. So we did stay in the trade there, just created a little broadening formation here on the 5-minute. Oops. Right, there was a little broadening formation, and it bounced off the bottom and eventually broke through, right? So it just rode the 15-minute broadening formation, right? Kind of like a slow melt up all day until it got up here to the 200 fib extension of the April bull flag, right? Up here at 6504. So that's the 200 fib extension of the April bull flag. We've talked about that April bull flag since, I don't know, maybe October of last year, right? Even before that, when we were in that sideways range from 24 to 28, from like July to September, we talked about that bull flag. And it's, again, continuing to hold true as far as like a level to respect. So we did get a bit of a rejection up here. Also, like we were talking about, this 15-minute broadening formation is coming here. So when those two intersect, you can see we got this greater pullback. Now we did get a soft lower high here to a lower low, which you could have exited there. We waited for the more concrete lower high here, and then as soon as we went 2 down on that candle, we went ahead and exited. Make this a little bit larger for those who can't see, right? This was our basically melt up all morning, getting up here to the 200 fib extension, 15-minute broadening formation, pulled back, got the soft lower high, then a concrete lower high, and then we went ahead and exited there, right? So majority of our position, we left only a couple of runners. We had internals that were strong, but the price just didn't feel like it was reflecting it, right? It was moving very slowly. If I go to our internals for the QQQ, you can see the tick. It started below the zero line, but popped above by 9 o'clock central, and then stayed above zero line pretty much all morning. But it did start to trickle back, and finally did kind of start to break below. So that was like the only weakness that we really saw. Otherwise, vol QD, money coming in versus money going out, money was just coming in, right? It kind of stabilized towards the end of the day, but that was at the trend higher zone, right? Same with ADQD. It might have started below the zero line, but by 9 central, it was on its way up to zero line, and then it never got back below zero line. Now, it didn't get to trend higher zone. That's the one thing that we did kind of point out. Yes, everything was bullish and moving upwards, but breadth did not. ADQD represents breadth, and that it did not reach the trend higher zone like money going in did. So the money was flowing in, but it was more concentrated, and it wasn't fully market wide. Excuse me. And you could kind of see that reflected there in price, right? It kind of pulled back, went sideways, just how ADQD went as well, right? Remember, SOXL is an ETF. It's not a single stock. So yes, it can be, even if breadth is not wide, especially if all the money is going into chips, right? Chips can push hard, but if breadth is not wide and chips is kind of moving slowly, we know all the money isn't going directly into chips. So you got to kind of watch things. Is it getting kind of toppy, right? And then so we had the pullback. We sold most of our position here, kept some runners. We saw a little bit of games here on a higher time frame. This did create the higher low on the 1 hour, right? So we did bounce off of the overnight high, and that did create the higher low on the 1 hour. And we pushed back up. But we did ultimately make a lower high on the 1 hour. You can see it was almost equal high, but it was a lower high, and then we started to trickle off into the afternoon. So we did end up, after we made the double top, I don't even want to say double top, but the lower high on the 1 hour, once we went, locked that in as being a lower high, we went ahead and sold the rest of our position that we had bought today. As a matter of fact, let's just pull up the 1 hour chart so you can see that, right? So here's today's price action, and you can see there's where we peaked, earlier in the morning. We pulled back. There was our higher low on the 1 hour. We pushed back up, ultimately made a lower high, and that was locked in by this, 2 down going below the low of this candle, locking this in as a lower high. So we went ahead and exited the rest of our position there. We do still have some of the February 20th calls that we've been swinging for a while. Kind of feel like we maybe should have got rid of those today. We'll see what tomorrow brings, but we're still in nice profit. So if need be, tomorrow we can go ahead and cut those and start looking at March expiration contracts for swings. Those will give you a little bit more wiggle room than the 20th, although we do have basically a majority of this week left, and then next week it is less than 2 weeks, less than 10 days until expiration on those contracts. So you do see the theta taking hold a little bit more, and there's just no real reason to stay in those when that's the situation, right? You can always, at the very least, if you don't want to sell and take profit, you can roll them to March expirations if you think things are going to continue to go up. Now from a higher time frame perspective, we've made it known that we are neutral at worst and bullish leaning. But we do have to continue to recognize that intraday and the day chart and down is more just volatility, and there are opportunities still for lower highs, and so we need to keep in mind that we could still have a little bit further pullback, right? So no need to play around with those February 20th expirations too much longer on the swings. Like I said, tomorrow will probably be maybe Wednesday, because we got some good economic data coming out on Wednesday. That'll probably be the latest that we stay in those February 20th contracts. Just full disclosure. But again, another great day, especially if you swung calls from Friday. But even if not, even if you didn't get the 1 minute higher low right at opening print, even on the 5 minute, after we had a nice little push, there was still some meat on the bone, right? You were able to get, let's see, this trigger was like 62.78, and the exit over here was this is 64.43. 64.43 to 62.78, so about a little less than $2 of price movement there on the underlying ETF that you were able to take advantage of, and especially if you're at the money, in the money. The delta is very friendly on those SOXL contracts, so you should have been able to make some pretty decent money today, right? Let's zoom out a little bit more. We did look at the 1 hour. Let's take a look at the 4 hour, get a little cleaner chart here. And we can see we put in a soft lower high and soft higher low, is how I kind of look at it. We pushed up and we got this 3. It wasn't just a full 2 down candle, right? We got the 2 down and the 2 up all in one candle. So look at this more as like a soft higher low here and soft higher high so far. If we push up and get a 2 up, maybe failed 2 up and come back down, then I would take that as being the more solid high in this particular push up. But unfortunately, it would still leave us below this high over here, which we need to get above to make a higher high. So we'll see how things continue to play out tomorrow. We had to deal with this 4 hour and 1 day downtrend line today. Seems right now that we've broken through it, but we need to make that higher low above it to continue that push up. Otherwise, we could just get a 3-1-2 down tomorrow and be pulled right back down into or underneath that downtrend line. So 4 hour is definitely looking good. I might have skipped over the 1 hour a little bit too fast, right? We did get, like I said, the higher low here on the 1 hour, but the lower high. So what does this end up doing, right? If this ends up being a higher low and we continue higher, then we're okay. But it does look kind of like a bull flag situation here on the 1 hour, right? Here's your flag pull. There's the flag. So if we do pull back a little bit more, possibly, and bounce, that would put us back up, going back up and looking at going 2 up on the week. The 100 fib extension of this move on Monday is just below the market maker's expected move high. So definitely looking bullish and would give us that higher low on the 1 week chart if we were to do that, right? If we go 2 up this week, that gives us the higher low. So the hour, again, is going to be our key. Do we make a lower low or do we make a higher low? If we make a higher low, obviously, that we could continue back up, but it might signal just some more sideways action. We might go sideways through Tuesday, waiting on Wednesday's economic data. Who knows? But at the very worst, if we do make lower low, then obviously we've started another downtrend on the 1 hour, and we have to look at that 4 hour again, like we were showing, as not totally being defeated, that downtrend line there. So let's get rid of this. There we go. So that right, if we go 3-1-2 down, then we're back here underneath the downtrend line. So just want to keep an eye on that. But so far so good. We had a long ways to go to make a higher high, so it was going to be tough. And we talked about last week, it wouldn't be the end of the world if we made a lower high on the 4 hour, especially if we could end up making a higher low after that, because we have to get a pullback at some point to get the higher low, and it would be kind of crazy to just go straight up to it. it usually stairs up, elevator down, right, is how they say it. So just a straight shot back up is not as expected, and so a lot of times we look for that lower high just to set that higher low so that we could start another uptrend and get to moving higher, right? So still got some things to do on the 4 hour and 1 hour. The day, same with the day, right? We've got plenty of room. We can put in a lower high. We've got a soft lower high here at that 67.69. Getting a soft higher, a lower high, because it was part of a 3 candle. So we had a lower low and a higher high put in all in one candle. So if we're looking for a solid higher high, that we have to be, that's back up here at that 71.98 level. So we'll see how things go. Looking good so far though. And let's just go to the week, zoom out to the week a little bit so we can talk about or look at what I was talking about. If we do end up going 2 up on the week, that locks last week in as a higher low, continue this uptrend, right? So again, that's everything from the 1 week and down, right? The week and up, I'm neutral to bullish leaning. The 1 day and down, I'm neutral to neutral. I wouldn't say I'm bearish leaning, but I'm not bullish leaning on the 1 day chart and lower. We're just kind of playing the volatility right now. But if we can go ahead and get that 2 up on the week, it's the difference between the difference between the 2 up trigger and the magnitude is not that much. So I would hope that if we can go 2 up on the week, we can get the higher high on the week as well to really lock in that uptrend, because it would really stink to go 2 up on the week and by the end of the week we're still stuck within that market maker's expected move range, and then the next week if we go 2 down, now we've got a lower high on the 1 week chart. So again, on the week and up, I'm neutral to bullish leaning, but below that, just neutral. All right, so let's go ahead and take a look at the month. Get a better chart here. Better chart here. There we go. So again, inside on the month, not much we can say. Definitely don't want to go 2 down on the month. Right? That kicks in that 1, 2 up, 2 down. Magnitude being down here at the gap, down here at 50. Was this 50? I'm sorry, 28.12. I don't know why I said 50. 28.12. So definitely don't want to kick off that 1, 2 up, 2 down. Just want to continue to push higher and get that 2 up, possibly. Even if we don't go 2 up, if we can close as high in the previous month's range as possible, that would be definitely more bullish leaning, right? If we look at the quarter real quick, again, we ran that STRAT, the 1 combo 2 down, combo 2 up, reached its magnitude at 70.08. So not a surprise to see the pullback. The key is here, how far do we pull back? We want to try and stay as high up in that candle as possible. Still not even halfway through the quarter, so a lot of time to go. But we do want to mention again the week flip and the month flip, right? This is where the week flips red and where the month flips red. It's not too far away. $59 is it's $4 away or $5 away. So we do need to keep that in mind. There is a good possibility that we can go flip the week and the month red, putting us in a full time frame continuity conflict, and that would just indicate more chop or volatile action, sideways action, as opposed to just continue this uptrend. So we'll see how things continue to go on the quarter, and then on the year. Believe it or not, first month of the year, we kick off the reversal, 2 down, 2 up, and we reach the magnitude, right? So again, it's reached magnitude, not a big surprise to see some pullback. So just want to continue to stay in that, in force on the 2 up, right? We want to stay above last year's high of 50.76. As long as we're above 50.76, things are neutral at worst, right? So there's no more STRAT reversal to be in or magnitudes to be reached. At this point, we're just looking for extended targets, and once we get above 74.21, we're in blue sky territory. 74.21 is the all-time high. So just gotta continue to play it by ear. Continue to watch the fundamentals on chips, right? I think the case is pretty strong for them fundamentally for the next few years at the very least, right? As long as AI is having that big push, there's going to be need for compute and memory and all of that. So, SOXL is definitely a good spot to be in for the near future, in our opinion. But they did run the strat reversals, and so this cooling off period should not be unexpected. The key thing is just to continue to watch things, keep things lined up, and continue to pile some cash on the sideline and wait for the trigger to trigger, whether it's the upside or downside. Right now we're just kind of in a no man's land and waiting for new triggers and targets to be set up. So just continue to play the daily trade and short-term swing trade as well. We've got a little bit of a range to play with right now. Let's go out to the 1 hour. Let's go to the 4 hour. A little bit of a range to play with, right? We talked about this the last couple of weeks, right? If we look at the range we were in from like October to the end of the year, we'll just call it that range right there. And then once you expand the range, duplicate, there we go. They say you double it, right? So we've already doubled it. All right, so if we're going to get back into a range that's above this range, let's duplicate that, right? We should be looking to go to around that $80, $81, $82 level, right? Should be. I'm not saying that's where we're going to go, and I'm not saying when we're going to go there, but if we continue down this path of, doubling the range that we were in previously, then we should get up to that 81.73 level, which, plays into these fib extensions from the April bull flag, as well as this monthly broadening formation that's coming in here. So that's what we've got there from our zoomed out view. Let's go ahead and zoom back in here and start looking at how we're going to play tomorrow. Let's get the right chart up here. 5 minutes, right? Just from the scalping perspective first. We know that, there we go. We know that overnight high and overnight low will probably change by the time we get to trading tomorrow. But let's just move this over here. Let's say overnight high kind of tests last week's high. Where we go? And then overnight low. We'll just bring it back within range here. And we'll say it's here. All right. So we've got our, first and foremost, the 4 hour markers, right? We've got overnight high, previous high a day, previous low a day, and overnight low, right? So the only thing we would need to wait on is the opening print. So if we get an opening print somewhere, in the middle of the overnight range, we want to look for higher lows at or below at or above opening print to get into calls, and we want to look for lower highs at or below opening print to get into puts, right? If we open above previous high a day, have a slight gap up, maybe we pull back and bounce off previous high a day, and then we push back up. Once we get that higher low, even though it's a little bit below opening print, because we have that level of previous high a day and the gap close, gap filled reversal possibility there, you could take that early entry. It'd be a little bit more risk on the board until you get back above the opening print level, but you could go ahead and take that, lower or higher low here with the gap close to get into calls. Otherwise, you want to, wait for price to get back above opening print. Maybe we get push up, get a lower high. A rejection or a little bit of a pullback off of overnight high, and we come back and get a higher low at or above opening print. You want to go ahead and get into calls there. Obviously, overnight high being the first target because previous high day we're above it already. There's not a lot of magnitude there, so depending on how price is moving, if we're not hitting that level with a lot of momentum, maybe you get rid of more of your position than half. Maybe you even get rid of the whole position if you want for just a quick scalp. We'll have our triggers and targets here set for the 4 hour and 1 day charts here in a second. So obviously you could go past overnight high, but for the strategy of early morning scalps or early entries into day trades, higher lows at or above opening print, that those targets are overnight high and previous high a day. So technically that would be the ultimate target, right? So not a lot of magnitude to the upside. Now, if we do push down, maybe close that gap, come back into previous day's range, bounce off an overnight low, come back up, and then maybe reject off of a previous high a day, we get that lower high at or below opening print. Maybe we even push back up into, what was the gap before we get the actual rejection, essentially a previous high a day. If once we get that lower high at or below opening print, we want to look to get into puts. A lot more magnitude to the downside, right? Obviously, overnight low wouldn't be too much further, but previous low a day is all the way down here. So you would have more magnitude to the downside, but we do have these levels of support that are going to come into play now. And those are levels that we were resistance previously. So, previous resistance turns to support when in an uptrend. So you would have to look at those as possibly being levels of support that we bounce off of if this uptrend is going to continue. So don't get too far ahead of yourself and expect that, we've got to go down to previous low a day if we get past overnight low. That's not always the case, but that would be the ultimate target for that particular move, right? So higher lows at or above opening print, get into calls. Lower highs at or below opening print, get into puts, right? I think that's enough for that part of the strategy, right? So let's switch to the 4-hour chart, look at things from more of a day trade, maybe overnight swing trade perspective. We did get left with a 3-1 in today's 4-hour chart, meaning we had the bullish engulfing candle in the first 4-hour period of the trading session today, and then we had the inside candle in the second 4-hour. Now, it was an inside candle, but it stayed within that top, not only top half, but I would say top third of the previous candles. So definitely more bullish than bearish. However, when looking at pure candle structure, it is a red inverted hammer. So, obviously price closed below where it opened, and bulls had their chance to push price up, but were rejected and price pulled back down. So in looking at just a purely candle structure perspective, that is more of a bearish candle, but when taken into context, you could look at it as, bullish consolidation. We already looked at everything from that 1-hour view, as this could be a bull flag on the 1-hour as well. So can't go more than neutral on this particular 3-1 combo. Now, if we do go to the downside in that first 4-hour candle on Tuesday, that gives us the 3-1 2 down reversal. The entry is at the low of the 1, exit at the low of the 3. So quite a lot of magnitude to go to there. But again, remember, we've got levels of support here. Levels of support that can act as bounce points, giving us some type of higher low on the 4-hour time chart and turning this into an uptrend, right? So, just keep that in mind as we pull back. It does appear we have, broken above the downtrend line. So even if we do pull back a little bit more tomorrow, just watch that 4-hour for a possible higher low, right? Now to the upside, this would obviously trigger a 3-1-2 up continuation. There's no real magnitude there, so just be looking for continuation at that point. You would be in this this kind of messy 3 combo 2 down, combo 2 up, but technically it is there. So you'd be looking for that 67-62 level as your ultimate target if pressing up tomorrow for the continuation on today and even Friday's price action. So there's still some decent magnitude to the upside there as well, right? On the day chart, if we go to the downside, right, if we go lower than Monday's low, that does trigger this 2 up, 2 down, triggering at the low of today of Monday's price action, magnitude being the low of Friday's price action. And then again, we've got that little sliver of a gap below as well. So that could act as a magnet in tomorrow's price action. If that does happen, we have a lower high on the lower high on the 1-day chart. And technically that would pull us back below this 1-day downtrend level, as we never really broke it. We intraday we did, but from the daily perspective we wouldn't have at that point. So we would have to keep in mind that the day is in a downtrend still at that point. So I don't want to say look out below, but there are plenty of levels to the downside for us to hit, plenty of targets, right? Worst of all, if we do, pull that 2 up, 2 down and poke into this gap, that does technically trigger this 1 combo 2 up, 1 combo 2 up, 2 down with a magnitude of the candle to the left of the 1, right? So that would take us all the way back down to last week's lows at 49.33. All right. So Again, we haven't gone 2 up on the week. We haven't locked in last week as a higher low. We could be continuing to push down on the week, which again is not the worst thing in the world, because even on the week chart, we've got a long ways to go before we would make a lower low. So this could just be the price exploration of finding that higher low on the 1 week time chart. So just got to be patient. That's what we've been talking about here for a couple of weeks now. Just play that intraday volatility the best that you can, especially if you're not able to look at the charts too much. Keep an eye on that 1 hour, that 4 hour chart, and make your plays off of those. And just stick to your rules, right? Don't get too risk happy, essentially. With volatility, a lot of times you want to just kind of pull back a little bit. It's not like you can't play, but maybe not play as heavy or take as much risk, right? But yeah, that's what we've got for everything up to the 1 day chart. Let's go ahead and look at the notes here for some hard numbers. We've been looking at the charts quite a bit. Right, so for Tuesday, February 10th, there will be 225 trading days left in 2026. The close price on Monday, February 9th was 64.03. And we know the opening print for the week, or the week flip, is 59.99. So if we go below 59.99, the week will be red. 59.51, the month will be red. But then we've got to get all the way down to that $45 level for the quarter and the year to flip red. So there is a good possibility that we get into some time frame continuity mismatches here, right? If the week and the month are red, but the quarter and the year are green, again, that just telegraphs we're probably going to have some more choppy action until we can establish getting back to full time frame continuity to the upside, or if we push all the way down to that 45.13 and flip front time frame continuity to the downside, right? Now, the week's expected move was plus or minus $8.47 from the close price on Friday. If you're not familiar with this level, make sure you go check out our weekend video where we dive deeper into this. But the expected move for the week is 70.22 to 53.28. So again, still just in the middle of that range right now. No gaps above, but we always keep track of where our gaps are, so we know that the gaps below aren't too far away. Kind of acting as magnets. And then we talked about, from a scalping perspective, we're looking for higher lows at or above opening print to get into calls, lower highs at or below opening print to get into puts, right? On the 4 hour time chart, we talked about price action to the downside would give us a 3-1-2 down reversal triggering at 63.96, magnitude of 59.29. We do seem to be in the change of trend on the 4 hour at this time, so we're not in a downtrend, but we're not in an uptrend yet. So just keep in mind, if we do go to the downside, we may not reach magnitude, and we've looked at 62.08 and 60.87 as possible bounce points. To the upside, we would get a 3-1-2 up continuation, trigger at 65.02, but the magnitude is only 3 cents to 65.05. So we do have some extended targets listed out here for you. And then on the day, we would have a 2 up, 2 down if we go to the downside, triggering at 59.29, the magnitude of the 4 hour. And then the magnitude of this 2 up, 2 down is all the way down here at 55.67. So again, in the midst of possibly turning trend around on the 4 hour, if not the 1 day, we do have 57.98 as a possible bounce point. If we go to the upside and go 2 up on the day tomorrow, that does re-trigger this 3-2 down combo 2 up at 65.05. The magnitude is ultimately 67.62. So again, we haven't totally changed the trend around yet on the day. So in case we're going to move in more of a sideways chop action, we've got our intermediate target 66.78 there for you. If we do reach magnitude, we do have that one further extended target of 68.56 listed as well. All right. On the week, we haven't gone 2 up or 2 down yet. All right. 49.33, we trigger this 3 combo 2 up, combo 2 down. That magnitude is 48.13, so not too big of magnitude on that reversal, but there is kind of a domino effect that can start to kick in with combination STRAT reversals once we reach that 48.13. So just watch out for those extended targets if we do break 2 down on the week. If we go 2 up on the week, we've got this reversal setting last week as a higher low, triggering at 67.62, magnitude of 71.98. If we do happen to reach 71.98 and continue to press higher, we've got our extended targets listed here for you, especially including that 74.21, which is all-time high. All right, we talked about on February, still an inside month. Got to get down to 45.08 to trigger this 1, 2 up, 2 down. Don't really want to see that, right? Because the magnitude of that move is 28.12. So stay above that 48.08 is the, or 45.08 is the key. And then if we do continue to the upside, breaking above 71.98, that just triggers this 2 up, 2 up continuation. And we've got extended targets out here, no magnitudes on continuation patterns. And again, that 74.21 is the all-time high. On the quarter, we did trigger the 1 combo 2 down, combo 2 up, already reached magnitude at 78.08. So again, just looking for those extended targets here on the quarter, 74.21 being that all-time high. And it's the same case on the year as well, right? We kicked off that 2 down, 2 up at the beginning of the year, reached magnitude, and at this point, just looking for all-time high in the extended targets there. All right. So there you have it. Those are your triggers and targets for everything from the scalping perspective all the way up through the 1-year chart. Hope everybody enjoyed it. We just tried to jam in as much information as possible without taking up too much of your time. So again, do hope everybody enjoyed it and got some good information from it, right? If you did enjoy it and you've made it this far, please give us a thumbs up. That would really help the channel grow. We do appreciate those who continue to tune in consistently, leave comments consistently, and give us those thumbs up. And we know it can get a little bit boring sometimes, but you never know how much that means to a channel like ours, right? So we just want to keep afloat. We're not charging anything. We don't have, membership fees or anything like that. We're just trying to spread a little bit of information, some little kernels, little golden nuggets out there that can maybe help, other people flourish in their trading, right? We're not saying you need to use this style. Maybe you want to pick a couple things from this style that we use and apply it to your particular methodology and make it better, right? But we just want to get this information out there to as many people as possible. So thumbs up goes a long way. And again, we do really appreciate those who continue to tune in. It's nice to see those same names showing up. So we'll go ahead and end the video here like we normally do. If you're watching this Monday night, we hope you get some good rest tonight. Wake up refreshed tomorrow. If you're watching this Tuesday morning or Tuesday during the day, we hope you got some good rest last night. Woke up refreshed this morning, and we look forward to getting out there and trading with you.